All right, welcome everybody. We're here today with Tex from OlympusDAO. Tex, by the way, is there anyone else from your team in the audience yet? We should pull up.
Yes, Glue Eater here.
Perfect, just invited Glue Eater up. All right, welcome Glue Eater, welcome Tex.
Hello.
Welcome Foxes and Olympians joining us today. Really excited for this community call between ShapeShift DAO and the OlympusDAO. The reason that we're holding this call, for those of you that are wondering, is primarily around this new product that OlympusDAO launched last Friday called Olympus Pro. They reached out to us a few weeks ago to tell us about Olympus Pro, and basically we think it's a good opportunity potentially for ShapeShift DAO to be able to leverage the Fox emissions. So the same similar idea to how we're rewarding Fox for liquidity providers right now with the Fox farm. Olympus Pro offers an alternative for DAOs to be able to offer Fox rewards and actually accrue liquidity. So instead of just rewarding community members and liquidity providers with Fox, you can actually reward Fox and use that for the DAO to actually acquire liquidity pool tokens. So if it sounds a little complex, the hope is that by the end of this call, we'll have a much clearer picture of what this could look like. The Olympus DAO team, Tex, actually posted a proposal in the forum, a draft proposal, to give more clarity for what this could look like this past weekend. So today we're going to meet them, learn a little bit more about Olympus Pro, and then open it up to the community to ask questions. So without further ado, I'd love to pass it over to Tex and Glue Eater. Can you guys introduce yourself and maybe just give a really quick high-level overview of what Olympus DAO is?
Hey, yeah, thanks for having us, Willie. So I'm Tex. Glue and I are the heads of partnerships at OlympusDAO. At a very high-level overview, if you haven't heard of Olympus before, we're aiming to create a decentralized currency for DeFi that is not pegged to the value of any fiat currency. So we're aiming to fill a niche that exists in the market where Bitcoin and ETH have both become like assets in that their value appreciates pretty rapidly. But we're trying to launch a reserve currency for DeFi acting kind of like a decentral bank with our reserve currency OHM, which is backed by a basket of assets, which includes several stable coins, but also Ethereum and some other tokens that we've earned from some of our investments. And that's kind of a whole high level overview of OHM. And one of the key components that it introduced in its design mechanism was how to bring those assets into the Olympus treasury. And that's where bonds come in for Olympus as its primary mechanism for providing the market with OHM tokens in exchange for assets for the treasury. And we kind of realized for this Olympus Pro product that we could leverage these same bond mechanisms to actually help other protocols accrue their own liquidity. Lou, do you have anything to add to that?
No, I think you covered it. So, hey everyone, thanks for joining. My name's Glue. I'm again, like as you mentioned, part of the partnership team. The one thing I'll add is that alongside these bond mechanisms is a somewhat active management part that is operated by our policy team in the DAO, and they help ensure that we're meeting our targets in terms of liquidity acquisition, underlying basket assets, helping tune the levers that are available, and that's also baked into the Olympus Pro product. So that's small tidbit. Thanks, Willie, for having us.
Yeah, thank you guys. Thanks for the overview too. I'm really excited about OlympusDAO's kind of core offering of this stablecoin backed by a basket of goods. So excited for that, and really excited to learn more about how ShapeShift DAO can use these bonds potentially. So the Olympus Pro stuff, it definitely takes a bit to wrap your head around, and I think we'll definitely dive into how it works. Before we dive into that, can you guys just give an overview of why should a DAO consider working with OlympusDAO on a bond program?
Yeah, good question. So one of the things that I've noticed as a DeFi user is when you actually go and participate in a lot of Pool 2 liquidity mining incentives, you actually notice that when these high APY liquidity mining programs begin, the token price is one thing, and you look at it with the expectation that maybe you pool these two assets, token price will go up, you'll get a bunch of rewards and be rewarded in turn. But what kind of plays out a lot of times is the price of the token ends up declining over the period that liquidity mining incentives are offered, as everyone acting in their own interests look at their rewards, realize they can compound their rewards into the pool and kind of earn more of that governance token, but it creates like a negative sell pressure on the price of the token in return for liquidity that at some point in the future there will be a reckoning date where you have to decide, are we going to decrease liquidity mining incentives completely? Are we going to extend them and maybe run afoul of our initial emissions schedule? And as a protocol, when you own your own liquidity, you actually get a little bit free from these constraints around typical liquidity mining programs when new protocols decide this is the emission schedule that we want. And in return for those emissions in a bond program, you actually acquire that liquidity instead of, you can think of it as owning the liquidity instead of renting it from liquidity farmers.
I really like that analogy. So to help put it into context for the community, we just had a proposal passed recently to extend this liquidity mining program for the Fox and ETH pool on Uniswap v2. So the first program, it was 15.75 million Fox that were allocated to reward liquidity providers who provided Fox and ETH liquidity on Uniswap. And that proposal was really successful. That program was really successful because we were able to build up about $20 million of Fox and ETH liquidity, largely thanks to that program. So, but the problem with that is that once the program ends, all of a sudden that incentive can be pulled out from underneath these liquidity providers. So for that reason, a proposal just passed recently to extend this program on Uniswap v2. So with this bond program, what it can do is it can actually, like Tech said, enable us to buy liquidity, enable the DAO to actually purchase liquidity with Fox rewards that it's giving out, as opposed to renting this liquidity. And if you think about, so how much liquidity, how does this actually work, to put it into terms of like how much Fox would the DAO spend and how much liquidity could it actually acquire relative to if we were just renting this liquidity?
Yeah, so what I've kind of seen, the liquidity depth that is usually bootstrapped for Pool 2, it usually shakes out somewhere where the annualized incentives APY pool depth kind of hovers around between 70 and 90%. I think that's pretty average for DeFi. I think you guys are somewhere in the 80% range. Is that correct, Willie?
The APR on the Fox pool right now,
Yes.
it is higher than that. Let me see. I think it was about 100. Yeah, it's 136% right now.
Oh, that's right. It's 80% after the reduction.
Right. It should decrease about 1/3 after this reduction, assuming no change in liquidity.
Yep. Cool. And so then basically that's kind of how the pool depth kind of shakes out, at least what I've seen market participants kind of anchor around, and that's where you get the depth of this liquidity. And in order to start accumulating it, essentially with this bond program, it would initialize a contract that would offer Fox tokens in exchange for the LP tokens themselves. And you would initialize it at market price. And if there were no takers, because it would just be kind of a wasted transaction to provide LP tokens for Fox at fair price. So you incentivize it with a slight discount. And over time, if nobody purchases that bond, the discount increases until a market participant decides to purchase that bond. And at that moment, the LP tokens are transferred to your treasury, while a claim on the equivalent amount of Fox tokens at that discount rate is initiated. And we have some bond parameters that control the speed at which the discount increases. But at that moment, your claim on that is initiated, and your Fox tokens vest over a period of about 7 days.
Got it. And so to help the community just really wrap their heads around this, basically, compared to right now, compared to giving out $10 million worth of Fox rewards to incentivize liquidity, and then we get liquidity, but the DAO doesn't actually own anything at the end of it. It's in this program, the DAO could give out, let's say, $10 million of Fox rewards, and end up with, I'm looking at the proposal, basically the goal would be at least $9 million of Fox and ETH liquidity pool tokens.
Yes.
Awesome. So hopefully that helps the community understand. I think when I finally understood that, there was definitely an epiphany moment, and I realized really how cool this bond program is. So can you talk about kind of the motivation for why you guys launched this and the need you saw across DAOs for a product like this?
Yeah, Glue, do you want to build that one?
Yeah, I was actually going to just chime in on one of the peripheral benefits of just thinking, not to dodge the question about why did we launch this, but I wanted to frame that as why does this matter for the ShapeShift community and DAOs writ large? So I think one of the things that you think about as a liquidity provider or a governance token farmer, pull-to farmer, et cetera, is that you put the LP in, and you're subject to impermanent loss and a lot of various risk, including people just farming the token and dumping, and then you're stuck with severe impermanent loss. So there's that on the consumer side. You're really able to look at this as a mechanism to buy and acquire ShapeShift tokens at a discount to market with pretty much substantial size, no slippage, and avoid getting sandwiched by MEV searchers, right? So I think that there's a number of like consumer benefits that we've thought about in launching this and that we've experienced in our own protocol. So that the one thing that we've seen over the last 6 months with Olympus is that we've acquired, as Tex mentioned, over $100 million of our own liquidity. Since we're in a XK AMM, we're in Sushi right now. We've generated 2.5 million in fees, and that's a peripheral benefit that's awesome for the protocols. And we're also able to let users buy OHM at that discount. Like I mentioned, we're seeing bonds at discounts around 5 to 6%, and they're buying in sizes of like $300,000+ in buys. So you'd be hard pressed to find that ability to buy with no slippage at that size with other mechanisms. So as you can thicken your liquidity pool, you're benefiting not only the protocol but also the user. And that was with that in mind. That's why we've really wanted to share this as a product to the broader DeFi community.
Awesome. Thank you guys for explaining the motivation and stuff. I definitely love the idea of the DAO actually owning some of its own liquidity. And I think it's easy to see the benefit of that compared to just, like you said, renting liquidity.
Yeah, and to add on to Glue's point there, I just dropped a dashboard in the stage chat on Dune, and this kind of lets you visualize a lot of our inflow metrics. But just to kind of hammer on that point, in the 5 months that the Olympus protocol has been live, we've accumulated, like you mentioned, $100 million in liquidity, but importantly, that's a productive asset. And we're closing in on $3 million worth of trading fees on the LP that we own. So that turns this expense where you're renting liquidity into ownership, and then as well as having a productive asset for your treasury that no one has more stake in the success of your liquidity than your DAO itself.
Yeah, great point on the revenue generation. I know we're really eager for opportunities for the DAO to generate some more revs. So do you guys typically, is there anything else you want to share with the community to help give kind of a baseline understanding before we dive into questions? I can see we've got some community members starting to raise their hands with questions.
I think we're ready for some questions.
Awesome. I'm going to bring Disruption Joe up from Gitcoin. Hey.
Hey guys. If it's a little loud, I apologize. I'm on a walk, but this conversation was enlightening. Hey.
Thank you, sir.
Thank you. Do you have a question for the Olympus?
Yeah, I'm leading one of the work streams with the Gitcoin DAO, and we're definitely facing this in the work streams and thinking through our treasury of how do we not just rent liquidity and find different solutions. What would you say would be like the biggest competitors or protocols that offer similar type solutions, and what are their failings, and exactly like how you distinguish between them? Because I think it seems like I'm getting the intuition that this is kind of what we're looking for to solve the paying our contributors without having downward pressure from emissions problem.
Yeah, that's an excellent question. So as far as the design space for different liquidity programs, I know that I think Andre has put out a couple solutions about actually selling options as liquidity mining incentives, but this still represents a claim on some underlying rewards in exchange for less sell pressure for protocols. But I know that with this structure, you don't really end up owning anything at the end of it. Another alternative, and this is kind of something, I find this one kind of interesting, is that if you were looking to pursue liquidity for your project in general, you would need to have like a very high amount of the other asset that you're looking to pair with for liquidity. And how do projects typically acquire ETH or stables for their treasury? In a lot of instances, it's either through like private funding deals or OTC swaps with, large players in the game, which usually leaves community members, it's good for the protocol, but it doesn't really provide that democratized access to these financial deals that is a big underpinning and value prop of DeFi writ large. And if you look at this bond program, the discount that you're getting on Fox tokens in ShapeShift's case for providing liquidity can be kind of conceptualized as like a democratized OTC deal, where it allows everyone to gain access to the discounts.
Yeah, that's a good way of putting it. That's my only question. It's very top of mind right now.
Yeah, I think it's a really huge topic in DeFi more generally. And another competitor that I'll mention is Tokamak. We actually really like the guys over at Tokamak. And this provides more of a way to have single asset direction of liquidity. And it kind of also protects users from impermanent loss, but it still doesn't quite fit the same niche where your protocol would own this productive asset.
And then on the other side of that, then there's other options of things you can do with it, since it's actually an ownership LP and not just a claim on like a standard option. That gives you more things that you could do with that asset, or is that?
Yeah, potentially. In the instance that you wanted to actually take some portion of the liquidity pool and provide maybe concentrated liquidity in V3, that's something which is theoretically also possible, but it opens up a lot of avenues for the DAO to direct how it wants to establish its liquidity at its discretion, instead of being left more so to what we've been kind of referencing as mercenary capital, because a lot of times when you decrease your liquidity incentives, you see a lot of users unstake in search of more profitable farms. Although there is still a baseline level of loyal community members who are just looking to grow their stack of the governance token that they're farming. But importantly, our model actually allows this as well.
Cool. Well, thank you for those answers. Definitely interesting.
Thank you,
Thanks
sir.
for the questions, Joe. Yeah, I think it's really cool to see. It's kind of almost like liquidity mining 2.0, right? And liquidity mining was great. It's definitely proven to be effective, but it's not perfect. And the cool thing about this space is that there's people all around the world like Olympus and Tokamak and other projects who are working on improvements to liquidity mining. And I think, if I understand correctly, they're not really mutually exclusive, right? So you can still have liquidity mining programs going on, and then you can start to experiment with things like bond programs, as well as a token reactor, Tokamak token reactor, and possibly some of these other solutions, and then see what works, and then double down, and eventually maybe not have to liquidity mine. Can you guys speak to like using multiple of these together techs and eventually getting off of liquidity mining?
Yeah, Glue, you want to hop in on this one?
Yeah. So in our initial cohort, which we will be announcing some of the partners this Friday at our community event called FOMO 3 on Friday. A few of them are essentially working through a pilot program. So they'll be doing some defined percent allocation to our bond program in tandem to the liquidity mining. I think the question on everyone's mind is this more efficient and effective in building their underlying backing? And then they'll likely pursue a deeper engagement following that initial program. So right now, we see it coexisting. And as Tex mentioned, like Tokamak, who we're good friends with, we share a lot of community members. The Tokamak situation is also something that can live, we think synergistically, where it's not you select, we need a Toke reactor or we need Olympus Pro. I think we'll live in a world where both will coexist. But I am not super optimistic on the future of just pure liquidity mining and it being sustainable for the long haul. So we really believe that the future here is in these bond mechanics and having protocols own their liquidity in this fashion. Tex, do you have any ads there? Miss anything?
No, that's a excellent overview of it. It's supplemental to liquidity incentives, and it gives you a path to eventually be able to taper them off without causing some massive flight of liquidity.
Awesome. Thanks for the great answer, and thank you everyone who's posting questions in the ShapeShift stage chat. We'll make sure to get to those. In the meantime, Josh, did you have a question?
Yeah, thanks, Willie. I've got a couple questions, and I'm part of the ShapeShift DAO and super interested in ways to diversify the treasury, and I think it is a great idea. I very much see the benefits of owning our own liquidity. So just like from a first question, from a mechanics standpoint, just trying to concretize this some. So if let's say I just contributed to the Fox, we determine it's going to be Fox ETH, right? Uniswap liquidity is what we want to try to bring into the treasury. So now as a consumer, I've deposited Fox and ETH into the liquidity pool. I have my LP token, and that is then what would then sell to the DAO. I would sell the LP token for more Fox tokens. Do I have that correct?
Yes. Yeah, that part is correct.
And then then it's taken as like the value of the LP token we consider is the value of the Fox and the ETH that it took to get that LP token. And let's say that LP token, I don't know the exact numbers, right? But let's say that cost me $100 in Fox and ETH together to get that one LP token. I'm then selling that to the DAO for something over the discount, something over $100 worth of just Fox. and we just keep moving that number up, how much Fox we offer for each LP token until the market indicates that now there's buyers or takers for that.
Yes, that's correct. And an interesting point on this is that the bond mechanisms and the way that it values that LP token is intrinsic to the contract itself. There's no oracle that it calls to get the price. It's actually just a standard like decrement to the exchange rate. And the way that you're mentioning it is the amount of Fox tokens would actually keep increasing until someone was incentivized to purchase that bond. And then at the moment that they purchase it, and depending on how much they purchase, it actually takes that discount and pushes it back down, sometimes even into the negative territory, where it's actually you would be paying over market price. So it's
Each
kind of
purchase then adjusts the price for the next.
correct. And this is the dynamic pricing model, which is extensible beyond Olympus, and where kind of the breakthrough in our thinking was that we could offer this to other protocols as well.
Right. And then when you talk about the bond, it's a smart contract that it just exists that we would deploy. We determine some parameters for, and we would then deploy this, and it's a separate smart contract for like each DAO. So if the ShapeShift DAO wanted to do this, we would have our own smart contract that is the bond for selling or for acquiring LP tokens. Is that right?
Correct. It's two smart contracts. One of them is a treasury contract, and this is where the amount of Fox emissions that you would have to fund the entire program exists. And then you would have a bond contract that actually is what users interact with. And when a bond is created, it stores this information in state in the EVM. And that's where it allows it actually monitors and says these are the amount of Fox rewards from your bond that you can claim. And just an interesting point, the reason why I mentioned the treasury contract is that would be where you could deposit Fox from the DAO treasury into this treasury. And suppose you wanted to discontinue the program, this treasury contract that we would deploy for you guys, you would be in control of the funds in that contract at all points in time, where you could remove funds as needed or deposit additional funds to increase the size of your bond program, but you would actually be the owner of that contract.
Gotcha. And okay. And then if anybody else has questions, I still have a couple more, but if anybody else has them, please come up and I can make sure there's room for others. Otherwise, I'll keep going for a little bit. So
yeah, keep going.
Okay, thanks. As a like thinking about this from the benefits from the consumer side, it would need to be right. If I think about the economics of it, I would need to be able to sell my LP token for, I would think, at least more now than thinking of my expected value of, what my APY is, and I can leave it there for 3 months. And now, granted, I guess, but your point is, if I just sell it for more Fox tokens now, then I'm not exposed to impermanent loss and some of the other factors of leaving it in the liquidity pool. Is that kind of what the value add to me as a consumer?
Yep, you got that exactly right. As a consumer who owns the LP and is a Fox maxi, you avoid impermanent loss because you've acquired just this discount. And then you can, one of the advanced techniques that our active bonders do is that they roll it into a new position week over week, and you can do the math there. If you compound 6%, or sorry, not 6%, but whatever percent discount you get week over week, it's pretty astronomically high.
I see. So as a consumer, one of my strategies could be 1 week, get some LP tokens, sell them. There's a week vesting period before I get all my tokens from selling my LP token. Then I just match that with a little bit more ETH or whatever, get more LP tokens, and I just compound it that way. Is that what you're saying?
Yes, you are describing the ideal bond strategy, assuming you can beat the market and keep getting that, right?
Right.
Yeah, you're basically catching on to the active strategy for acquiring more and more Fox over time.
Interesting. Okay.
Yeah, and it's pretty cool because if you were to actually take the Fox that you received from a bond and sell half of it, pair into the LP, and then bond again, this is exactly what users do when compounding into pool 2 incentives and why you have that negative price pressure on the token. But under this model, they're actually returning those assets to the treasury. So it's like a virtuous cycle with, some minor side effects that would be roughly equivalent to sell pressure you see from pool 2.
Right. So if I'm like participating in pickle, right, which is compounding on just into the renting of liquidity, you're saying that, right, that it's selling, but the DAO isn't getting anything from it. But in this mechanism, you may be selling half your tokens every week to be able to match and go back into the LP, but at least you're selling the LP to the DAO. And so the DAO is benefiting that way.
Yep, that's correct. And one of the other peripheral benefits you can think of here is, since the DAO will at some point acquire a substantial amount of LP, even if you were to, say, sell those Fox tokens you vest, the DAO is again benefiting, right, from that trading fee and acquiring it in the LP that they own. The goal is to essentially own such thick liquidity that it's less impactful.
Yeah, right. And then you have less and less price slippage the more LP tokens the DAO owns. That was your point about OlympusDAO now having whatever it sounded like an impressive number to me. How much liquidity you're owning now? You have less slippage with every sell.
Yeah, we have like something like $105 million of liquidity just in the OMDAI pair.
Yeah.
And we have some other liquidity pairs as well.
Yeah, we have a Frax pair there, and I think I was just on Matcha and looking at the slippage. If you were to sell like 1,000 ohm, you get 3% slippage right now. That's like a $500,000 sell, I think. So it's pretty impressive when you're looking at the DEX aggregator, and with regard to how thick our liquidity has become over the last many months.
So you guys have been kind of piloting this bonds program yourself, eating your own dog food at OlympusDAO, and it's worked really well. You can see all the results in that Dune analytics chart. And then now is Olympus Pro basically taking what you guys have built for yourself, now making it available to other DAOs?
Yep, that's correct. That's the general gist of it is that, and we provide engineering and policy support as well on top of. It's not just it doesn't end with just saying like, hey, here's the contracts and here's the system. We want to see the folks that we partner with succeed. So it's on top of Olympus Pro being this platform, we're also offering a marketplace that will be called Olympus Pro X, and that's where all of the bonds will kind of coexist. And we predict that people who are really adept in the bond game, as you were discovering as we talk through it here, they will be trying to get the best rates on the different bonds that are available, and that might present new opportunities in itself. And like, maybe I want to bond Alchemix, or maybe I want to bond Fox. It's kind of that interesting game that we played when that marketplace is available.
Super cool. And can you talk about some of the other projects that will be listed on that marketplace?
Well, I slipped there, but if you saw the forum post, that was one of them. Yeah, Friday. FOMO will announce the rest. We're excited to share that. Small slip there.
Awesome. And I guess that's a good point too. What would be the timeline for a program like this? So I guess when would it make sense, and how soon could we actually deploy a program like this, so we can kind of figure out how it fits with our other liquidity mining programs?
Well, when we were first discussing the liquidity mining changes that you guys have upcoming in October, one of the things that we want to make sure when we work with protocols to get them added to our bond marketplace is that there's sufficient capital in place and investor attention as we add new protocols. So we're launching them in cohorts in our bond marketplace. And so our first cohort, as Glue mentioned, Alchemix was a pretty big one that was advertised pretty widely. There are some others if you sleuth different governance forums and see my face on it. But for ShapeShift in particular, we were looking at launching with the second cohort of launch partners, which will actually line up almost perfectly with your guys's planned reward changes around October 13th. So I would think that following week is when we would launch with you guys as part of cohort 2.
Cool. That timing lines up really well, especially because not only will we be launching our next round of liquidity mining then, but also the DAO will be getting a pretty significant infusion of Fox from all the unclaimed airdrops right around that week. So that timing sounds great. And I see in the proposal right now that you guys are, it's the draft proposal, so it's open in the forum right now for feedback and discussion. But the current draft proposes $1.5 million worth of Fox to be allocated over the same duration as the new liquidity mining program.
Yep.
And it looks like it's a amount per day. So can you speak around how that Fox is kind of trickled into the program per day?
Yeah, I believe this was one topic that Eric brought up in the governance proposal discussion section. And so the way that I looked at it was just what is the amount that you guys are reducing your rewards by? And that amount, I believe, is that reduction is, I think, 57,000 Fox per day, or roughly around like $25,000 per day that you'll be reducing emissions. And this should have some positive impact on the price performance of Fox, as there's that much less capable of being sold and compounded into the liquidity incentives. So the proposed amount that I took as just a mental model around was taking that amount and just taking half of it. So there's still a net decrease in emissions to have that positive impact on price performance, but then have it be a meaningful amount where the DAO accumulates $1.5 million worth of liquidity over the span of 4.5 months. This part is kind of open to what you guys view as your goals, but from my perspective, it seems like an optimal setup.
Yeah, I really like all the thought you guys have put into this. It's definitely, I agree. I think the parameters currently, I wouldn't propose to change any of them, but I'm curious for feedback from the community. Yeah, basically, the proposal is to provide about $1.5 million worth of Fox rewards over the 4.5 month program, and then the goal would be to end up with at least $1.35 million of liquidity owned by the DAO at the end of that program, and then we can determine whether we want to continue it. We can also, as far as I understand, at any point during the program, we could decide to cancel it if things weren't going as intended.
Yep. Yeah, exactly.
Awesome. All right, Michael, thanks for joining the stage. Do you have any questions for the Olympus team?
I do. Thanks, Willie, for having me up here. So, as I understand it, there are a lot of pros, a lot of benefits for the Fox token holder, for the ShapeShift DAO. I'd like to ask about the negatives. What bad things could happen? There's always one ever-present negative with every blockchain system, and that is a bug, a flaw, a vulnerability could exist that none of us know about until tomorrow it's suddenly discovered and something bad happens. Other than that ever-present issue, what are the downsides for hooking up Olympus in this way to the Fox DAO?
Yeah, so that's a really good question. The downside, at least from a code perspective and smart contract risk, the Olympus Pro contracts are very similar to the contracts that we use for the Olympus protocol itself, which has been audited. But we're actually undergoing a further round of audits for these contracts to make sure that they're completely bulletproof. And so other than that front, I think the main risk would be very similar to Pool 2 incentives, where the optimal bond strategy being, selling half of your bond proceeds and then bonding again the following week. This is not any different than Pool 2 incentive compounding. So I don't see that as being much different than current liquidity incentives. But the other risk may be just an optics one where, potentially people who are providing liquidity see this as dilutionary in some way with their current incentives, and then they pull liquidity and move on. That can be offset by just acquiring more liquidity for your protocol, but those are the main ones as I understand it. One additional one, and that it hinges on having an active community who are participating in your bond program. So if you don't have participants, you can actually see these discounts reach really high levels. I would expect really high in this case to be anything above a 10% discount, but it theoretically keeps going. So that risk is having an inefficient discount on your bond sales. But if you look at Pool 2 liquidity incentives, your discount is 100%. So we're aiming at a minimum to get you 90% of that value back for the treasury.
Gotcha. One follow-up question. So you mentioned that the OlympusDAO, you guys have been eating your own dog food, and you've been using this for how long?
We have been live for about 6 months.
Okay. In those 6 months, I imagine you must have had a lot of users come in with varying levels of comfort with blockchains and crypto and all these things. What problems have you observed your community members having with this model? I guess what are some of the gotchas that our foxes could or should be aware of so that we can navigate around them and don't fall into the same traps that OlympusDAO members may have found along the way?
Yeah, I'm happy to take some text. I think in the early days of the OlympusDAO, to your point, the biggest challenge we have is really educating people about this opportunity and about how the bond mechanics work. I think the advantage of Pool 2, and I'll be clear here, is that it's easy to understand. I put my LP tokens in, you give me some rewards over time, and I sell those rewards. It's kind of a clear understanding. This, just to put succinctly, is really, you want to acquire the Fox token at a discount, and this gives you that opportunity. Bonds have a lot of mechanics that take some time to understand. So we put together different educational, like Twitter threads, videos, and we're happy to even keep dropping in the Discord and doing more community calls, answering questions. That's part of what comes alongside a partnership with the OlympusDAO, is that we want to be able to help your community be successful with the bond program. I think we've actually seen a pretty strong uptick in users, and that's why I posted a Dune query in the chat a while back there. So if you look for my name in the Dune query, you'll see our bond efficiency. So the 90-day moving average of the discount, you can actually see it trending downward, and that's just the market calibrating itself and becoming more in tune with how to be successful at the bond program. So all that said, I think it comes down to education. It comes down to really motivating and showing your community that there's a good way to interact with this program, and we'll continue to be here as community support and actively help people in this marketplace. So hopefully Foxers are interested in joining us in the Olympus Pro X marketplace, and we'll definitely be there. Our community Discord is always available to help answer any questions they have as well. Pretty good community. Did I say anything, Tex?
There was one thing I wanted to jump in on. When I mentioned earlier that your claim on the discounted Fox tokens is stored in state in the EVM, this is one risk point for users where if you purchase a bond and then halfway through your vesting period, you purchase another bond, it will actually overwrite your claim on the remaining rewards. So this is one thing in the contract that users need to be aware of, is that you must wait to claim your full amount before you can purchase another bond from the same address. You can always split it up into different wallets, but that is an important one to keep in mind.
Thanks for answering my questions, guys.
Yeah, thank you.
Thanks, Berkeley. Welcome, John.
Hey, everybody, and thanks Tex and Glue and the Olympus team for presenting us this proposal and the work I know you guys have already put in on this over the last few weeks. I think it's super interesting, and I'm pretty supportive and bullish on it. Could you all speak to a little bit on what it, how you determine what the right time period for a bond is? I think you all said in the proposal that the idea in the current proposal is to make it for 7 days, and that seems kind of like your standard, but how do you determine that? Like, why 7 days instead of 14 days or 3 days or whatever?
What do you think, Glue?
So to be transparent, our OlympusDAO bond tenor is actually 5 days. And that's partly attributed to our current staking rewards that are 7,000 APY. It just makes it easier to understand the 5-day rate. We chose 7, I think, at this point, just purely for simplicity. It's easiest to conceptualize. If you buy a bond, you wait a week, and then the capital is fully available. It does linearly vest, so you can come back daily and harvest the fraction of the bond you want to. I won't say that with current L1 fees that's my advisable choice, but it's possible to harvest rewards linearly over time. In terms of longer bond tenor, it's something that our policy team at OlympusDAO has been exploring for us, as people have alluded to. The OlympusDAO eats its own dog food, and we are thinking about longer bond tenors, but it's not something we've deployed. So that's why we didn't want to change too drastically from our current 5-day bond tenors.
Yeah, and that relatively short bond tenor also allows people an easy mental model for thinking about how that discount plays into their short-term goals. If you put it too far out on the horizon, you would expect people to take into account the uncertainty of price performance over that period of time. And so this just kind of allows people to lock in a discount over a more perceptible time period. And a week is kind of like a natural time period for when people think about that.
Great. Thanks for those answers, guys. Again, really think this is pretty cool, and I'm in strong support of this, hopefully moving forward over the next week or two. Thanks.
Thanks, John.
Thanks, John. All right, please keep the questions coming. I think Tex and Glue have been doing a great job of just answering the questions, either coincidentally or maybe you guys have been watching and just making sure to incorporate those questions in your answers. One question I have is, what is the Olympus Pro's business model? Does this cost the ShapeShift DAO anything?
Yeah, I'll take this one. So as part of this, there is a small percentage that is associated with returning to the OlympusDAO treasury. So that's our motivation. I think Zeus mentions it in the Medium article, but our goal is to really show that we want skin in the game for your success as ShapeShift as well. So when a user bonds, the OlympusDAO treasury will also receive some small percentage of that bond directly into its treasury. And then the end goal is to never sell that fraction that we receive. It's not really designed to be this like massive revenue stream, but again, it's more so that we want to see you all succeed, and by tying a small fraction of your token to our treasury basket of assets, it really helps drive that home. And the way to think about us as the Olympus DAO is that we are the ultimate diamond hands. We don't want to sell anything in our treasury. That's not a goal. We're not trying to get a bunch of tokens and then dump them just to increase our value. It's really, these are truly partnerships, and we're excited to join up with these different DeFi protocols and have Olympus Pro out there. So I hope that helps give some color on the business model.
Yeah, it's like, what a better way to actually have a reserve currency for DeFi than having our stake in different protocols that we partner with. So that's the idea.
Super cool. So Fox would actually become one of the reserve assets in this basket of goods that's backing the value of Ohm token.
Yep. Yeah, exactly.
Exactly.
Super cool. Something else we're really interested in too, I'm not sure if this is on the table, but we also are keen to diversify the Fox treasury. Some community members are, at least myself included, with other protocols tokens, especially for protocols that we're partnered with and aligned with. Is there any opportunity for the ShapeShift DAO to get some Ohm tokens out of this?
Yeah, so recently passed via Snapshot was our ability to do DAO swaps. So it's something that our team explores actively, and we're looking for the right partners to execute those types of swaps with. I think the one that is public on both of our forums is with Sushi right now. So there is precedent, and we're really excited to be working with some of the big names out in DeFi. So I think that's another discussion topic definitely to be had going forward.
Awesome. I'll check out how you guys are doing it with Sushi, and love the idea too of like having a team kind of committed to these DAO swap opportunities. I think we might borrow that from you. So excited to see how you guys are doing that and potentially make our own proposal there.
Awesome. Look forward to it. But yeah, I think it's a great discussion topic as well. We really do feel like I think there's many layers to working together as Olympus DAO, whether it's Olympus Pro, whether it's a DAO swap. Tex leads an amazing fraction of our team in trying to identify what our next reserve assets, which should be launching soon. And I think there's just a lot of variety of ways that we can partner together. So DeFi.
Agreed, for sure. This is kind of just the first obvious opportunity, but there's definitely a lot of opportunities for ShapeShift to work with Olympus, including being an additional interface to this bond marketplace and giving ShapeShift users easy access to the marketplace, especially as you guys launch on different chains too, right? We can help users both bridge between these different EVM networks and access the bond marketplace across different chains. So definitely looking forward to that. So we've got a few minutes left. We've got this draft proposal up in the forum right now, which has a lot of really great information. Thank you guys for putting this together. But is there any piece of the proposal that you guys would really like feedback on from the community?
From my end, I think just evaluating whether this $1.5 million in liquidity is the end goal, or is it a first good step? I've noticed in the stage chat, one of the audience members, Chadwick, has been stressing how this baseline level of liquidity that your treasury would own would make the project unruggable, since you have the largest stake in your project's success. And so I think just evaluating what level of liquidity that you want to own as a project and how best to get there over what time period, I think would be next steps to assess after we kind of evaluate how the bond program is going.
Awesome. Sounds great. You hear that, everybody? Go check out the proposal and share your thoughts and consider, not only this initial proposal, but what this could look like long term. Here's a question that you guys have answered a couple times, but we've heard it it's come up a few more times, and maybe it'd be good to dive deeper into it. Can we just talk about like the differences between this bond program versus the DAO selling Fox for ETH and getting LP tokens that way?
Yeah, so what I had mentioned previously is if you sold Fox directly for ETH, you could do it a couple different ways. The first and most obvious one would just be market selling it, but this would provide a immediate, pretty large negative impact on your price, as well as the optics of it looking like you're dumping on your community members who are providing the LP. So the optics that way aren't super great. You could pursue an OTC swap for Fox with some large institutional investors, generally at some large discount. And that brings into light the other benefit of this bond program is the bond discount is actually available to any user who sees that discount being attractive to them, whereas a lot of these OTC deals are kind of struck behind closed doors, and that's not really available to the average investor.
Got it. Yep, I think that makes a lot of sense, and I agree. And I'm not a fan of the optics of the DAO ever just dumping Fox, especially on liquidity providers. So appreciate that. And to your point too, it's not, these things aren't exclusive either. It doesn't mean that the DAO couldn't also do an OTC deal, but kind of the way that this is structured right now is as an experiment, and we can see the goal would be $1.5 million of Fox rewards to acquire at least $1.35 million of Fox and ETH liquidity. And then again, at any point, if the things weren't going according to plan, I do like that there is that kill switch, so that we're not committing to a full 4.5 month program in case things don't go as planned.
Yeah, definitely.
Hey, welcome back, John. You got another question?
I was just going to add on to that point, because I've talked about this in the stage chat a few times, but in my mind, one of the main reasons I feel like it's different than, and you kind of went towards this, but rather than the DAO selling Fox for ETH and then getting LP tokens that way, by doing it this way, basically the DAO is never selling that Fox to the market. And it's arguably going to people who hopefully are incentivized to be long Fox, because the whole point to get a bond is to acquire more Fox, which makes most sense to do if you're long Fox. And if that's the case, and the Fox goes to people who are long Fox, that Fox might not ever hit the market, or at least less of it will than otherwise would. And so basically this allows the DAO to, in general, acquire more LP tokens without impacting the price in a significant manner. So to me, that's pretty attractive.
Yeah, exactly. And it kind of also on the user's end, monitoring bond discounts. Maybe it's just me, but it is more fun for me monitoring that and snapping up discounts than just providing LPs that I typically get wrecked on anyways.
Yeah, I'm excited to start flipping these bonds now that I understand everything here.
Yeah, it's really fun.
Also, we'll have, it's one of the benefits of going and aiming for cohort 2 is that we'll have the ability to kind of see the initial cohort and see the results of all these other programs. So really excited to see how it works for these other projects, and hopefully by the time cohort 2 comes around, we have some really high confidence that this type of program will work well for us too.
Yeah, absolutely.
Awesome. Well, we're right at the top of the hour. Thank you, Tex and Glue, for joining us today and sharing all this information, and for also all the work you guys have put in already ahead of this to draft the proposal and to learn about ShapeShift DAO and really make this proposal a great fit for us.
Yeah, definitely. Thank you guys for having us.
Thanks for the time, everyone. It was great. Appreciate it. Shout out to the homies in the chat too for dropping in. Appreciate you all.
Thanks everyone for joining. We'll see you guys in the Discord, and everyone remember to go check out that forum post and share your feedback. Thanks all.
Thanks, y'all.